I just sat here, marked this all out without recording. Wow. Okay, so this is Gcad H1, and we have here, we have a high, a low, a higher high, making, I'm choosing these two, down close candles here. This here is a breaker, and we have a fair value gap here. It's an H1 fair value gap. We have this order block here, and then I just marked out this here on the low of this order block. So we have a breaker and an order block lined up together and a H1 fair value gap, and we have targets low. And we have the consequent encroachment of this large this city right here was already reached already here. After this, so there's a strong chance that price will be just coming up to this area and dropping. It's looking like it wants to just run away. Now, this here is an up close candle, but this here I would presume to ignore because it's a doji and it's not strong. It's an indecision type thing here, although it does have pressure here. If it was to just drop, then I would presume that this here was um, a significant area, unless it's just bouncing off of this low here, of this the low of this candle here, which is a part of the breaker. So that low is 296, and this high is 291. So it's just 4 pipettes off. So that is very it's very well possible that it could be reversing off of this here. So it's just a lesson to see. And the lower targets are down there and the closing there. This low right here, this low here, which is last week's low. I will be expecting that to be taken out. That's a target there. So we have a higher time frame target, the daily. This daily low here, two equal lows, relatively equal lows. That's the sell side liquidity that I believe it's going to, and that's really it. Now I can come over to the 15-minute. And we see, I also marked out the, did I do it on this one? The Asian, let's see, yeah, the Asian low, which is here. This is the 12 midnight candle. So ending in Asia, and it's swept there, and it's swept there also. So right now, the Asian low is swept. So I wouldn't be surprised if it went up there. The Asian high is all the way over here, which I don't think that it would take that out. So again, this is here is the midnight, and London is not 2 o'clock yet, so there is no London low or high yet. So we'll just see how it goes. See how it goes. So we have equal highs here, 1 to 15. So this can take out those highs. We also have here, there's a little imbalance here. And then we have this last upwards candle here. So that you know, gives a little disimbalance here. And it can fill it, come all the way up here and fill it, and then leave this one here and then head down. So let's see what happens. And this is so little. I mean, thinking about from the range from today, let's see. Wow, that high is way up there. But this is a swing here. Range wise from here to here. Price, let's check it. Where else? Let's see. From a range, whoa. From a range, you see equilibrium right here. Hasn't even really been, I mean, just, just hit it. Just about hit it. But we see that it did not come up in there. So there's always a possibility that that's play. 1, 2, 3 hits to the top and dropped. Yeah, so it's made this ugly W pattern right here at previous day low. Very ugly. So I mean, I could see this doing that, coming up here and dropping. But again, it didn't make a big move past equilibrium retracement. It didn't make a really good retracement. So if it wishes to do so, I mean, that's from just that swing there, but it did press deeper. With it pressing deeper, whatever. That's all just spiking. So it's big, big move down. So anyway, this still has, some price could still run up into here. We have this fair value gap here, or this city here, and so it could just come above this little structure here and turn around, or it can come all the way up and break Asian high, come up here, and then go down. So let's see what it has in store. And while that's doing that, let's just take a look at AU. Just as I thought. Close that. Oh no, it's not that what I thought. I was hoping for this one here. It's pretty ugly, but I was hoping for the 3 candle pattern to hold here, but this guy already broke it. So that 3 candle pattern is not there. I was hoping for it to hold it, and then it makes it run to the top. But it's 2 o'clock now. There it is. The 3 candle pattern did not form. So they reject off this order block. sitting here. Not a good high probability trade. Go back to Gcad. Okay, so oh wait. Um okay, so on the H1, Gcad has confirmed a swing low 3 candle pattern. So move so fast. It just turned. It's only been 1 minute. Popped out and then zoomed up. It gapped down and then zoomed up. Okay. Alright then. So it looks like it's doing its thing now. We're not gonna go against the trend. Oh, this looks nice. Striking a higher time frame PDA right here with this pattern. We're not gonna go against the trend right now. Let's go back over to M15. The M5 is showing all signs that price wants to go higher. We have this, and it pulled out of it quickly. And these highs were broken here. These here were also broken. Price came down into this here. Just shy of it. And then pulled away. Came down, away. Get a fib. Here. She goes. And symmetrical swing, you see, brings it up here into this H1 fair value gap. Over here, there's no imbalances and such. All these spikes. And only near the next imbalance is right here. Which in general is what these like the symmetrical swing price generally comes a little bit above them. It creates a pattern somewhere above it. So right now, you know, a story is being told, and right now things are matching. So I can do a reset from BTMM work. They would say like a reset, where price comes and then creates a pattern that lets it go up and reset the three pushes type information moves. So today's high is also Asian high. Asian low has been swept already. It's 208. $209. 5-minute chart. $15 seconds till new candle till 210. This here's the H1 fair value gap. Find this water block body. This is a bulb. So it's in line with it. I pushed pause because I was about to switch over to what do you call it, no, to silence it and just let it run, um and so it running real quickly. So right now I just filled the H1 field value gap, and let's clear this area here. So there could have been stops above here. So see how over here these relatively equal highs, price cleared above it and then came back down and came back underneath it, creating this pattern here. You know, this is a similar pattern. See bodies of all these candles here, or at least the last two were broken and price came up and came to the consequent encroachment almost anyway of this gap here. So we will be looking for, keeping an eye open for something similar to that, where you know, price came above these highs and then came back down in there and create a pattern. Entry would have been you know, if you want to be risky, entry could have been once price came above here and dropped down, came striking this here, that could have been an entry there. Because as you see, this is the 1, 2, 3 candle pattern here. And then it came down, it came up, hit, and you know, roll over. For more confirmation, you would want price to come down underneath you know, a swing over here. The way this candle looks, I would say it wants to go higher. It can strike this here, this order block here. Right now it's pushing above this little one here. Okay, I'm gonna pause and put on that will be something else. They dropped it back within range. See this here? It's one close above the structure. I don't even think it's completely. Nope, didn't even close above it, all the way above it. Body wise, it did, you know. But we have one, and then it comes back into the range. Does its thing. That's what we're doing here now. It's 2 more minutes, and then that candle will close. Wow, it took out that. So now this came down and took out the low here, validating this as a bearish order block. Five seconds for this candle here. Okay, so right now this candle is formed, and I'm just gonna do an eyeball for the mean threshold here. Mean threshold of a minus order block. And then I'm going to mean threshold. I'm making this. Closed. Okay. From a standpoint of the three candle pattern, this one is it's not too tricky. I mean, this is obviously the highest candle, but remember the bodies matter too. But remember, when this closed, it gapped up a tiny bit. So this here is higher than this one here, body wise and wick wise. So the three candle pattern actually, when this one completes, will be will be in play. So looking at structure over here, it didn't hit this order block. It's two down close candles, the wick. It didn't hit it before it ran back up to the mean threshold here, there. Here, I'm gonna say, so the wick, it did hit this one here. So those touched. I usually like it to have room to run down and hit before, so like right now, it technically hit it. So it could be used just to bounce up and then hit that and then come down. I usually don't want to see that. I usually want to see it come down a bit and come up, make the structure, and it still has room to go down and then strike um, the PD array. And then by then, the structure was already formed, and that strike may bring a small bounce, but I would have already had some range from my entry to be able to choose to get out at, to let it, to get out at break even, if it's not going to go. You know, if this is a stop, if this is a stop run above this. Oh, the other good thing is that this is an engulfing candle. This engulfed this one. So that's a good sign. Also, this is an engulfing, a bearish engulfing. Five seconds. So at this point, we have a decision to make whether we want to get in as soon as price runs up here, if it's even gonna do it. Look at this thing. If price is gonna come up here, or wait for confirmation. Confirmation is like over here. We've seen it come up, come back down inside, come up, hit that mean threshold here, and then drop like this, and below here, and then it came up into PD array, which is the CIBI or the fair value gap here, came like into the middle part of it. We know that we can cut through candles to look at PD arrays and things, and we see right here we have this low, this high, cut all the way across. You see it here, and here, and price did come down and sweep underneath a swing. So that validates this as a institutional order flow entry. Okay, so anyway, back over here, we would make a choice whether or not we wanted to get in early and just get in when price comes here. Something similar to this where it just came up and you get in, or wait for confirmation. Because the bearish engulfing is here, I'm gonna just get in when I'll just get in up there. It should do a quick jump up there. If it does a quick move up there, that'd be nice. Like it should rapidly jump up there. And look at this. The close of this might be right in line with it. See, right there. Yup, look at that. Nice. Very close. So that's the close. The close on that is 325 and 324. Look at that right here. A lot of times, look, watch this. Yeah, 324, 5. Sometimes that number will be um it'll be the actual number. I don't know why they do that. Yeah, sometimes what they flash here. See that 1.71324. Sometimes that's not the actual number. When you go inside, then it'll be like 325. Like, oh, it's the same. 230 coming up. Okay, because I'm paper trading, I'm not paying attention to the other steps. So my bad. So if I'm gonna get in a little bit before there, my stop is going to be over here, above this over here. Yeah. Yeah, I'll just put it there. 11, 12 pips. The stop loss is 12 pips. So I would calculate the lot size based on that. Forex calculator. And I would enter that in. And I would know what my lot size is going to be. Okay, so to not make this so long, as it is already 40 minutes, I'm going to take now this is like because price is not there, this is considered a pending. Below it. And I came heavy into there. See that? How much you came into this order block. So on the 15-minute, 3 candle pattern. One will be here, here, and here. I had even forgot about it over here on 5. I forgot that's where we were. So 1, 2, 3. That baby already came all the way down there. Oh, wait a minute. Oh, here. And where did I say that X would be? Let me drop it right now. Um, Okay, so we see what occurred here. So now with the insight of hindsight, we can see how I erred here. Basically the formation of the M, it can be pretty um junky. So I have to remind myself not to, you know, lock in M's to be small little things, and a lot of times the proper M's have a W in the middle of them. So, so you have this is the first leg, and then you have this, and then this is the second leg here, and then this is it here. Now, note that I just want to go to bed. Did I get to mention it? I'm not sure what. Yeah, well, I didn't have the audio on, but I was just time. It was just time for me to go to bed, and I didn't want to sit here and watch for confirmation, but at the same time, I didn't remember to to at least place stop loss back where it was. So remember the original stop loss was a little bit above here. The original stop loss was about here. So it would have been hours or something over here. So there would have been some drawdown. If I would have just left it all together. Um, so it would have been, 10 pips and drawdown. Um, it was up here. So that would have been close. Now look at structure. So um, it came up above here, and it immediately came back down into the range. Okay, so like this structure here that I was looking at on the higher time frame, um, it looked different, and it came up with one big move, and then came. Let me just go back a little to it. I think I was on 15. Yeah, and out. Oops. No, was it this one? I must have been in 5 minutes. Yeah. There, there it is. Um, high, low, higher, high, and run just these above and came back down into the range. Um, and that's what I was, looking at, paying, hoping would occur over here when price did its thing. Oops, it's all the way over here. Right, it was these equal highs, relatively equal highs. It came up above it and then came down and basically had um, this small M that only peaked above for a moment and came back in range. So now what happened over here with these here, that you see it came peaked above, and closed above, body wise above, just like that did. And came back in range, and all of this stuff here, you know, it wasn't saying, hey, I'm taking you out, it came up, closed again once, I wasn't paying attention to the fact that it came right back into range again. It didn't continue with multiple candles above this. It only had two. This one, and then when this one came out, it closed back in. Everything else stayed in. He came out one more time. So all this did, so we see how on this one here, with this formation, we have a high, low, lower high, and then it continued down. And the difference from that one and this one is that this one actually, the high, the low, it gave a complex in high, low, higher high, and then gave confirmation here, came up, and in the middle of this right here, okay, this low, this high, came up, it spiked up and did hit this order block, or coming across here, it hit the breaker. So you had a breaker and an order block. This last up close before this big move down, ate this strong, and also the breaker. We have this here, and we have a SIBI, and it came up, struck here, and closed within the middle of the fair value gap, and that would have been the entry right in the middle. I would have entered as soon as it got to the middle. I would have entered the original stop loss all the way up here, and it was not hit. And the original entry I was going to put there. That would have been 20 pips. So we had gotten the confirmation, and this structure here, we got the confirmation. We were back under this structure here. Had our confirmation. Okay. And we did target. I could have sworn I put a check mark down there, but I guess I did. And our target was last week's low, 40 pips. So 2 to 1. Come back here and see. I could have sworn I put a check mark. Yeah. Oh, I did check mark. Alright, but last week low was my target, and it got there. So it played out well. I have to remember the ends of more. Some of them could be complex, and stick with my analysis, and that's really it. It was pretty nice. Pretty nice play. Yeah, that was nice. Alright, that's it. Later. So, so you see, this is where in the beginning of the video, I mentioned that this low is where I was targeting. Daily low target. Daily low was the target. And just showing it now on the daily. This daily came down and hit it right here. Nice play. And let's just come to the H1. I cleaned it up, deleted all of the Fibonacci's, and here goes the original 3 candle. 1, 2, 3. Okay, that I had seen 1, 2, 3, and then it went up and filled this H1 fair value gap, and here goes the order block, and the this right here is the breaker. So struck the breaker, Came out, took the high of this one here, and then dropped. And came all the way down to where we wanted it to. It's such a lovely play. On the higher time frames, it looks smoother. It looks like, it looks smooth. So you gotta remember sometimes still just come over to the higher time frame, just to get out of the wiggling that's happening on the lower time frame, clear your mind and your eyes. And up here is where the original stop loss was, right up here. So really nice, really nice. All right.